Hello, 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 hello. What's good, guys? This is Jeremy McCory with Trading for the Benjamins, of course. And I came here again. This is the second video of our YouTube series that I will be releasing public to the masses on YouTube. And so I wanted this video to mainly break down trend lines in the market and how it benefits trend lines and supply and demand zones that can potentially help you out to be more and more successful within the trading community in the foreign exchange market. All right. So before we dive down deep into what we're talking about, which is the trend lines and supply and demand areas, I want to break down the three keys that we were talking about on the first part of the YouTube series. All right. So the three main keys of trading in the foreign exchange market right here is number one, trust the process. Trust the process. Understand that this is going to be a long and hard and rough journey to become one of the 1% in the world, which is being able to access and make money straight from your phone without needing without needing to put in time to make your money. After you learn it and you master the skill set, this will be second nature to you. All right. So please dedicate 12 to 18 months into the skill set and you will see results, not just 90 days, 12 to 18 months, almost 2 years. So key number two, know what you're trading. All right. Know what you are trading, guys. This was very, very interesting week right here because there was moves that happened in the market, but some people got into some of these trades a little bit early, a little bit too early, not understanding what they are actually trading. I know a couple of people in my trading community, sometimes they mistakenly not understand what they're trading, understand how volatile these moves can be in certain different sessions, right? Because we understand that there's three main sessions that we really have to worry about, which is number one, the London session, the New York session, and the Asian and Sydney session right there that we really have to worry about. We understand that moves are more volatile within the New York and London session compared to the Asian and Sydney session. Why? Because those markets are not as strong as the London and the the European and the US currency, right? Because we understand that pounds and euros and dollars are one of the strongest and most valuable currencies in the world and used to import and export. We understand that US dollar is damn near the world currency, if we're being real. So, key number three, know what you are risking, guys. Know what you're risking. Understand that you do not have to be trying to flip your account every single week. You could just be making about 10% a week, and that will do some wonders. Because if you're trading on a $100,000 account and you're making 10% a week, that's $10,000 you made in a week. Like I said in the first video, that right there is more than what most people actually make. Some people don't even make $1,000 more. So if you can make just $10,000 trading in a week, 10%, or even 10% of that, making $1,000 a week, that leads you up to almost making $5,000 in a month, which in the US, that's almost what the average family makes, $60,000 a year. So if you're making $1,000 every week, that's almost $4,000 or $5,000 that you're making a month. That's almost $60,000 that you are making within an annual year. So to know what you're risking and know what you're also rewarding yourself with is also more important. Each trade should be risking maybe 1 to 3%. 3% is pushing it, 1 to 3% of your account, and rewarding yourself double that or triple that if you find a good entry. But what we're going to show you right here is exactly how you can actually benefit within the foreign exchange market using trend lines off the daily, the 4-hour, and the 1-hour chart, and using finding supply and demand zones. So I might mix these up, but stay with me. I'll try to break this down a little bit more simpler, as simple as possible. All right, guys, let's right here. Let me just actually let me just all right. So I got me a new blank 4-hour Euro USD, Euro to the USD dollar. So we see it on the top left side of the screen, the Euro against the US dollar. So we understand that if the market is going up, the Euro has, again, more strength than the US dollar. But when the market is going down, we understand that the US dollar has gained more strength than the Euro. And especially since this is October 26th through October 29th, the week of, we understand that the United States is doing their elections. So of course, the US dollar is going to be a lot more strong, a lot volatile during these election periods, especially because the holidays are coming up right after it too, which is not even the best time to actually be trading, which is from November, December, and January, because the markets are going to be doing some funny moves. So you want to be making sure that you are picking out the best trades for yourself and not just trading just to trade in the market, right? So the US dollar is gaining more strength, mainly because fundamentally, because the elections are here, the elections for US is here, and because there's holidays coming up. But the market should be back to normal around February and beyond until the next November, December, and January, where the market resets itself, basically. And mainly because the big players in the markets are not really trading as often within these holiday periods either. It's mainly just retail traders. So let's just dive down deep and see. And I like to start with a top-down analysis because it helps us understand the bigger picture. Like I said, and I mentioned on the daily time frame, what we're looking for, each candle represents one day out of the month. So this is the month of July, and this is the month of August, and this is the month of September and October, where we see that it's about to complete it, move into November's period separators. If you don't know what the period separators are, it is separators between each given time period that we're actually listed. So since we're on the daily, we're separating each period separator represents a separate of time between each month. And on the 4-hour, each week, these period separators are separating between each week. And on the 1-hour is each day. So depending on really which period separator, which hour time frame that you actually trade off of, depends on basically what type of trader you are. On the 1-hour, you're mainly going to be an intraday trader. The 4-hour, you're going to be basically a swing trader. And on the daily time frame, you're basically going to be a trend trader, right? So that's something that we can dive down deep into later into the YouTube series. But like I said, let's find some trends, all right? So we want to first, when we're doing our top-down analysis, to find trends. So we're going to do wick to wick and see if anything can help us figure out where this trend could be going and help, just in case you just want to make sure that you are keeping a clean idea of what type of moves and what type of trend we're going in, because we understand this is obviously an uptrend. We're in an uptrend. Now we're in the consolidation phase. And we understand whenever there's an uptrend in the market, and let me draw it out for everybody too, so we can all see it cleanly. We understand whenever there is an uptrend in the market, right? There's always going to be, whenever the trend is about to change, there's always going to give us a consolidation phase, always, before the market goes back down, right? Before the market goes back down. It's always going to do that. Same vice versa if it was going down, right? If it was bearish, it's going to give us a consolidation phase before the market heads back up in a different direction. So that is keys right there. Whenever you're looking for a reversal, no matter the time frame, daily, obviously, you can catch moves on the lower time frame if it's consolidating on the daily. But just to keep your heads up on the lower time frames, on the 1 hour time frame, if it's consolidating, obviously you are most likely about to see a trend change, a change in the trend. So you make sure that you write that down and keep your heads able to see things like that occur in the market, right? So we see the consolidation, so we can prepare to see a change in the trend, right? So the US basically, I mean, if we're just using and looking at basic technical analysis, we can just see right there that, okay, we had an uptrend, we had our consolidation phase, right? We had our consolidation phase. We even marked our trend line, and it broke through our trend line. Price, the candle closed underneath our trend line. And it's November coming up, a new month. So we could probably, if this thing breaks this low, let me actually draw this out for y'all. If it breaks this low, right? If price breaks this low, we can most likely tell, okay, the US dollar is probably going to gain a lot more strength within the next year, right? The next month, if not the next month, if it breaks below that low, within the next year, it is probably going to gain strength, a lot more strength than the euro. So that's pretty good news for the US economy, because as we see, the foreign exchange market works off the US economy. So, I mean, not off the US economy, but countries' economies. So if it's going to gain more strength than the euro, then we can see good things for the economy to happen. And especially since we're going through, I don't know what time you might be watching this video, but especially since we're going through this pandemic that been happening since March of 2020, that's pretty good news, because maybe whatever president is elected for the country, whether it's Trump or whether it's Biden, we can have some good news, and maybe a vaccine might come and the country fully reopens without nothing holding us back. But maybe we'll see some good news. We'll tune back into this whenever. But right now, we're clueless. We're clueless on what actually might happen within this area, because we don't know the future. All we're using is data from the past, right? That's all we're using is data. We're using past data to dictate future data, right? That's all we're doing, is using past data to help us understand what the future could be, right? So we got our trend line, and let me actually dive deep into the 50 EMA too. So the 50 EMA is a lagging indicator. Now, the most important thing that I tell people about indicators is it is not the gospel, it is not the Bible, but what it is, imagine yourself as Bob the Builder, right? I don't know if everybody knows who Bob the Builder is, but imagine yourself as Bob the Builder. and you're using your tools to fix and build a building or do whatever, repair something. You're using your tools. Imagine all your indicators and confluences as you building, using it as your toolkit. So all of this is not just using one, it's not going to help you build it. But using all of these in confluence can help you build this perfect trade setup for yourself. So the lagging indicator is just understanding on if price is above, if these candles are above price, where my candlestick is, my mouse is, if price is above this area, it is a strong buy. Now, if price ever goes below the red 50 EMA, we understand that we're looking for sells. Just like here, we can be looking for sales since price is underneath our indicator. But it is not the gospel, guys. It can always mess up. I say technical analysis could be about 90 to 95% right. And you might have the 5% fundamentals that might mess it up, right? So, but technical analysis is key, all right? So whenever you're on the higher time frame, what I like to do is draw my zones, my supply and demand zones. Maybe use the previous period separator because that is the most recent data that we have. And I draw it all the way over, especially within the new month since the end of October is here. I draw it. And every time I see a long wick on the screen in one of the previous previous period separators, I draw a zone just to indicate that, okay, this is a large supply or demand zone that we should be looking for. So basically that's all I see on the higher time frames. If we're being real accurate, and we can actually draw for this right here. And then we start diving down into the lower time frames to help us out, right? We dive down into the lower time frames to help us out, to give us a better indication on what's going on the smaller time frame. So we see our trend line, we see it came onto the screen on the lower time frame, but how can it help us get a great setup? So as we see, okay, we're looking at our data, we're processing it. We understand that these period separators are giving us weeks at a time data, weeks at a time data. It's not giving us all the information, but it's separating things weeks at a time. And like I told you, the previous period separator can help you dictate what's happening in the future, which is the right side of the chart, right? And that's all we really care about, is what's actually going to help us dictate the right side of the chart. So as we see, we can see some type of downtrend in this area on the lower time frame. Wake the bodies, or whatever you want to do. Wake the bodies, because this was a downtrend happening on the 4-hour time frame, right? And that's really the only trend I can see that we're currently in, other than this period separator. I mean, this trend line on the daily that actually was broken. And as we see, we're starting to see it more and more clearly as it broke this area, but it started consolidating, which is probably just a retest that occurred on the lower time frames and dropped even more. But let's see how many pips that it dropped, because I'm pretty sure it dropped 100 pips. About a smooth 110 pips if you got a great entry. But let's see if we can get some zones that we can find in here. Remember, we're looking for long wicks that can help us predict data. So right here, as we see, just exactly where we were talking about, the consolidation area, which is probably just a retest that occurred, especially since it broke out the trend line. We see it, and we're going to start seeing a more clearer visual of it on the lower time frames, right? So we understand that why price actually broke and did this little consolidation area right in this area. That's really all we can see. Price is below the 50 EMA, right? Price is below the 50 EMA. Let's see what we can find. All right. All right, all right, all right. And you know, when, like I said, if we're intraday trading, we're on the 1 hour. If we're trend trading, if we're swing trading, we're on the 4 hour. And if we are trend trading, we are on the daily to enter, right? No, we mean to look. But since we're on the 1 hour, we're looking for smaller moves, not looking for longer moves. We're looking to be in a trade less than 24 hours. If we're on the 4 hour, we're looking for, and we're entering or swing trading, we're looking for a trade to be in for at least 2 to 3 days. And if we're on the daily, we're looking to be in trades for at least a couple weeks, a week or longer, to be in these trend trades, right? So, like I said, if we're looking, the previous period separator, which is the day of the 27th or the 28th, depending on where you see it, all we would really do, since we got a good area, we see that our gray zone was one of our supply and demand areas. We would get since this is a previous downtrend within this one period separator, guys, be very, very observant. And within this one period separator, this is a downtrend, right? So what we would do is get the high, and since the high is within on these dotted lines, we would get the high all the way to the low of the period separator. Whatever wick or candles on the low, whether it's on this or whether it's wherever, this is the low. And we're going to use our period separator to help give us some confluence in our Fibonacci. So we understand and we see that the 50 EMA, we're still underneath the 50 EMA. So what can we possibly be looking for? If you guess sell, that is exactly what we're looking for. We're looking for sells in this area, especially because on the higher time frame, we had this big zone that price broke out of. We had our trend line that price broke under and retested in this area, which can give us a big indication on that this could be a sell opportunity that we can capitalize off of if we're doing our full analysis. And like I said in the first video, when you're looking at market structure, the 50 on the Fibonacci is very, very important. It's always going to be one of the key indications for your trade, whether it's a neckline or whether it's a head and shoulders or the right shoulder. No matter what, it is going to help you. So you want to pay attention to that 50 level on the Fibonacci. So as we see, imagine if we didn't see this big move. We seen that price came up and was playing around right before London session. Right before London session, it gave us a doji. So this is 2 a.m. wherever I'm at in the world. 2 a.m., but it's 9 a.m. over there in London. And as you see, it comes up, it tells us the time, it tells us the date, it tells us where this one candle, let me pull it back up, where this one candle opened, the high, the low of that one candle, and where it closed. It gave us a clear indication. And when we look straight down, we have already about 5 confirmations. Remember, guys, our first confirmation is our trend line. It broke out of our trend line. It came back to retest it. Our second confirmation is the 50 EMA. Our third confirmation is the zone. Our fourth confirmation is the 50 off the Fibonacci. And our fifth confirmation could be exactly using our stochastic, because this trade has been overbought. A lot of people in the market, a lot of people in the market are currently are trying to buy this one pair up. Could you blame them? They probably thought that this area right here is going to be a rejection area, just like how it did right here. But they didn't understand all their confluences, because we got ready 4 or 5 confirmations already. 5 confirmations, including the stochastic right there, to give us a clean indication on why this pair actually dropped, right? It gave us a good understanding on why this pair actually dropped, and it rewarded everybody who was patient and who actually was up for these trades to capitalize off this pair. So guys, that right there is a clean indication on how to get the perfect trade setup. It's a clean indication on how you can succeed within the foreign exchange market and capitalize within the foreign exchange market. This right here is Trading for the Benjamins. This is the second video on the YouTube series. We're talking about our trend lines and our supply and demand areas. Please guys, tune in to the next video. Like, comment, and subscribe to the channel. Help the channel grow and help traders in the future find this channel and to help them plug in and lock in and let's lock arms and help out the future generation. Thank you guys. Tune into the next one.